Welcome here. Basic principles. We're going to talk about the dollar today. Has anybody here been trading for longer than a year? Longer than 2 years? Raise your hand. Longer than 3 years? Longer than 4 years? Okay, so we've had people that have been watching the dollar go one direction for a long time, and it's now going in the opposite direction. And frankly, it's pretty obvious at this point that the dollar is strong, right? I mean, we've pretty much obviously seen that. That's not news anymore. And so this really isn't a presentation about whether the dollar has gotten stronger. We could talk a little bit about why that might have happened. But what I'm kind of interested in is the bigger picture about the dollar. I'm interested in hearing what your questions, comments, or your clean jokes are as we go along. I believe that understanding economics as it relates to currency trading provides a context and a bigger picture to your trading. There are some people that will tell you, as far as efficient market theorists are concerned especially, that studying economics or fundamentals isn't going to make a difference. That all of the information about the market is contained within what? The chart, the price, right? And I'm not going to dispute that. I'm not here today to argue with efficient market theory or whatever else. I'm not here to tell you that charting and technical analysis aren't useful tools. I'm not here to argue one way or the other. However, have you ever watched a non-farm payroll report come out and seen an absolutely destructive job loss, and the dollar does what? Goes the opposite direction. I mean, what the crud is going on with that? I mean, there's tons of reasons why technically something doesn't seem like it's happening in a reasonable fashion. It doesn't seem rational or whatever. And for me, studying economics or economic principles behind the currencies helps to provide context or a bigger picture. I don't think I'm ever going to get to the bottom of exactly why something moved. But at least I enjoy spending time looking into that background and that context. Fundamentals or economics are too often studied superficially for short-term trading. For example, we talk about, there's tons and tons of discussion boards just full of techniques and strategies for trading short-term economic news reports. I'm not here today to tell you that that's going to make you money or lose you money. I'm not here today to argue with those people that do that or tell you that's a good idea or a bad idea. But what I am telling you is so often we think of economics or currencies just in terms of the economic calendar. GDP is coming out tomorrow, and that ought to provide a boost to the dollar. Why? Does the GDP and the dollar, do they have a special relationship? Do they spend time together? Is there a correlation? Does the Office of Bureau of Labor Statistics call up the Fed and say, we're going to have a bad jobs report, we need you to buy dollars? I mean, there's not some relationship like that. We think of it in terms of such short-term analysis. We're looking at, well, the GDP went up today, the dollar ought to do well. In fact, most of what the crowd is doing is exactly that. They're trying to find out short-term economic movement. They want to find short-term currency pair movement based on economics. The jobs report comes out, so I want to be out and ready. I want to be sitting in front of my computer at 8:20 Eastern Time every first Friday. I want to have a bowl of popcorn, a red phone to my dealer, and I want to see what the jobs number is as soon as possible, and then I want to make a ton of money. That's how most people out there look at economics. And I don't really look at it that way anymore. I've had my time doing that. I look at it in a little bit of a bigger picture. So theme number one for today's presentation is that just because an economy is weak doesn't mean its currency will be weak. Just because an economic report comes out that shows that the U.S. economy is exploding into flames doesn't mean that the dollar is going to do bad or good. It doesn't mean that anything has to happen. Nothing has to happen like that. Just because an economy is weak, right? The financial crisis that has spread worldwide is a credit contagion that started in New York City. And it spread worldwide, right? There's a cold economic front that moved off of the coast, the eastern coast of America, and spread to Europe, spread into Asia, spread worldwide now. But the U.S. dollar is just beating the crud out of other currencies. Well, just because the U.S. economy is weak doesn't mean the dollar has to be weak as well. The non-farm payroll, the report released in November, the numbers for October were negative 240,000. For those of you who don't need extra zeros on the end to understand what I mean. I put the extra zero down here. I didn't really actually mean to do that. It's just I'm trying to explain away a stupid mistake. All right, so the non-farm payroll report comes out. It's savagely awful. right? You probably know somebody who's been affected by the current economic conditions. Maybe you have been. Maybe you were in the mortgage brokerage business. Maybe you know somebody who was. The jobs report comes out, and instantaneously, that's not even a word. Instantly, the euro goes up. The euro benefits a bit from that. And then for the rest of the day and then a day after, it just tails off again. And what's the euro doing today and yesterday? Falling further. Is it falling further? I mean, what in the world does the U.S. economy have on the European economy right now? How could that possibly... We talk about this flight to safety. Think about it for a minute. Where are all those toxic assets that the Fed was buying from banks? Where are they now? You own them as a citizen of the United States of America. So get this right. The balance sheets of banks were awful because they owned all this bad debt. So they gave the bad debt to America and the dollar strengthened. Right? It's kind of counterintuitive. All the garbage that was on the balance sheet of companies around the United States, the financial companies, that's now on the balance sheet of the financial system of America through the Federal Reserve. Now that's kind of messed up, right? That's kind of weird. I mean, if we're all going to go down together, why in particular? I mean, people say, well, everybody's buying treasuries. Well, the rate on the 2-year note was something like 1% the other day. I mean, adjusted for inflation, that might be negative. That's a negative return. But a slightly negative return for people lately has been more attractive than, burning your entire 401k into flames, right? In the midst of the Dow Jones Industrial Average, during the same period of time where you see this very artistic arrow pointing downwards, in the midst of that same period of time where the euro was getting manhandled by the dollar, it fell from $1.30 down to $1.27, $1.26, $1.25. In the midst of this dollar strength, the Dow Jones Industrial Average lost 930 points. Now, riddle me this. What in the world is going on when the U.S. economy is tanking, the stock market is going into the tubes, meanwhile the dollar seems like it's doing really well?